How's it going, guys? My name is Franker and welcome back to the channel. Today we're going to be going through the fear and greed index and basically how we can utilize this index to help our trading, to improve our trading strategy. I'm going to be going through basically what is the fear and greed index if you're unsure what exactly it is, and then how we can apply that into our trading strategies, or how we could utilize it, in various different ways. Now, of course, before we do get underway, we are surging towards 400 subscribers. So if we could hit that like, hit that subscribe button, help the algorithm out. And if you do enjoy this content, as I said, do subscribe. We do post weekly cryptocurrency videos. More often than not, we're posting more than weekly. So do make sure to hit that subscribe button to keep up to date with all of our videos. So the first thing we should really ask ourselves when we're talking about the fear and greed index is, what is the fear and greed index? So if we quickly scroll down, why measure fear and greed? So the crypto market behavior is emotional. People tend to get greedy when the market is rising, which results in FOMO, fear of missing out. Also, people often sell their coins in irrational reaction of seeing red numbers. With our fear and greed index, we try to save you from your own emotional overreactions. These are two very simple assumptions. Extreme fear can be a sign that investors are too worried. That could be a buying opportunity. When investors are getting too greedy, that means the market is due for a correction. Therefore, we analyze the current sentiment of the Bitcoin market and crunch numbers into a simple meter from 0 to 100. 0 meaning extreme fear, while 100 means extreme greed. Okay, so what the fear and greed index does is it gives us a number between 0 and 100, 0 being extremely fearful and 100 being extremely greedy. And then somewhere on that spectrum, we get a number which indicates market sentiment. Now, how do we record that market sentiment? Or not we, how do they record their market sentiment? So we are gathering data from the following 5 sources. Each data point is valued the same as the day before in order to visualize a meaningful progress in sentiment change of the crypto market. First of all, the current index is for Bitcoin only. We offer separate indices for large altcoins because a big part of volatility of the coin, because a big part of its volatility of the coin price. Does that make sense? Because a big part of it is the volatility of the coin price. Yes, that makes sense. Don't worry. But let's list all the different factors we're including in this current index. So as they said, this is only for Bitcoin, the market sentiment. But at the end of the day, Bitcoin is generally going to represent 90% of the cryptocurrency space. Bitcoin is the largest token. It's got almost 60% of market dominance. So to say that this isn't going to speak for every single altcoin in the market, but this is going to speak for generally the entire cryptocurrency space. For the most part. So volatility 25%. So we're measuring the current volatility and max drawdowns of Bitcoin and compare it with the corresponding average values of the last 30 days and 90 days. We argue that an unusual rise in volatility is a sign of a fearful market. So 25% of the calculation goes towards volatility in the market, and as they said, if there are large spikes in volatility, meaning price moving quickly, or in terms of like more of a percentage moving faster, what you'll see is generally a more fearful market. So you can have a look. There's the Bitcoin historical volatility index. I've never looked at this. I don't know how accurate this is exactly, but you can kind of see, large spikes of volatility, in 2020. Obviously, there was a big bull market in 2020, and then 2017, the other large bull market. So you could sit here and say, huge spikes in volatility are generally a bad thing, or whatever, however they come exactly to their conclusion. But you can see, there are these large spikes time and time again. How exactly they mark up with the market, I'm not sure. I don't use this, but you can obviously just look at the fear and greed index because it takes it into account. There is also probably the more commonly known VIX index for the S&P 500. So, what they say is that, you can see these large spikes in volatility. If you have a look, this is 2008, obviously, the GFC. Pretty terrible time, pretty fearful time to be in the market. And this here, March 2020, that is the COVID dump. So If we take a quick look, Bitcoin obviously wasn't out in 2008, but I'll show you guys a quick chart so this makes a bit more sense. All right, so I've just gone through and drawn how the volatility for the S&P 500 compared to its chart. So if we have a look, we got 98, June 02, the GFC, and obviously the COVID dump. So we have a look at these points in time. Ignore my bad drawings. But if we have a look at these points in time, obviously the huge increase in volatility in these ranges, as they said, suggest fear. So when volatility increases, that's typically a fearful time in the market. And I don't know, probably not a lot of people were probably in the markets during these time periods, during, you know, the dot-com bubble, during the GFC. Probably a lot of people were in the market during COVID. These were extremely fearful times in the market. These were, you know, catastrophic, basically, end of the world. You know, if you were reading the news and stuff. But obviously, in retrospect, if you were buying in these huge spikes, we're talking about October 2008, March 2020. If you bought, where's October? I mean, October's not the exact bottom, but you know, it's only, you know, 12 months roughly, 12 to 24 months away from breaking out. Not the exact bottom, but pretty, you know, relatively speaking, you're not buying at the tops. You're buying generally pretty close to the bottoms if you buy on the spikes. So that's why they take volatility into account. All right, market momentum and volume. Also measuring the current volume and market momentum, again, in comparison to the last 30 to 90 days. Average values, and put these two values together, generally we see higher buying volumes in a positive market on a daily basis. We conclude that the market acts overly greedy to bullish. So obviously, if a lot of people are buying cryptocurrencies, then that's typically a bullish sign. Social media. So while our Reddit sentiment analysis is still not in the live index, we're still experimenting with some market-related keywords in the text processing algorithm. Our Twitter analysis is running. There we gather counts on posts on various hashtags for each coin. Publicly, we show only those for Bitcoin and check how fast and how many interactions they receive in certain time frames. So a unusual high interaction rate results in a grown public interest in a coin in our eyes, and corresponds to a greedy market behavior. So obviously, if Bitcoin is trending on Twitter, if Bitcoin is getting, you know, higher interactions on social media, that generally suggests more people are interested in it, which generally means, you know, people are trying to make money. They're getting greedy. They want to get into the market. So obviously, high social media interaction, you know, leads to more greed in the market. Now, surveys. Now, this is currently paused, it does say, but you know, we're conducting weekly polls, crypto polls, to ask people how they see the market. So they take polls, or they used to take polls, but they're not doing it at the moment. Obviously, that's a pretty good way to get market sentiment. You know, how do you feel about the market this week? And then they can just put that straight in. Now, the dominance. So this is talking about Bitcoin dominance. So the dominance of a coin resembles the market cap share of a crypto market, especially for Bitcoin. We think that a rise in Bitcoin dominance is caused by fear of too speculative altcoin investments, fear of too speculative. I don't know, some of these sentences don't make sense, I feel like, or maybe I'm going crazy. Since Bitcoin is becoming more and more the safe haven of crypto, on the other side, when Bitcoin dominance shrinks, people are getting more greedy by investing in more risky altcoins, dreaming of their chance in the next big bull run. Anyhow, analyzing the dominance for a coin other than Bitcoin, you could argue the other way around. Since more interest is in an altcoin, may conclude bullish, greedy behavior for that specific coin. So basically, when Bitcoin dominance is rising, sentiment is typically fearful, and when Bitcoin dominance is shrinking or getting lower, that generally suggests a more greedy market as people move away from Bitcoin into more speculative altcoins, which makes sense. And then trends, we pull Google Trends data for various Bitcoin related search queries and crunch those numbers, especially the change in search volumes as well as recommended other currently popular searches. For example, if you check Google Trends for Bitcoin, let's have a look at this. All right, maybe not. We'll see if I can get it up later for you. But you can't get much information from a search volume, but currently you can see that there are currently a 1,500% rise in inquiry for Bitcoin price manipulation in the box related to search queries. This is clearly a sign of fearful market. So depending on what's trending on Google Trends, so whether Bitcoin is trending, whether crypto is trending, or whether Bitcoin price manipulation is trending, you can kind of get a general idea for market sentiment. If bear market or recession is trending, then clearly the market is very fearful. However, if, you know, random altcoins are trending, if Solana is trending, if, you know, 10x my portfolio is trending, then probably things are getting a little bit greedy. So if we just have a look at Google Trends, obviously this is what they're looking at before. So like a term like Bitcoin, if we have a look at at the time it was most searched, if we can get it, it's May 2021, which May 2021 was obviously the last bull market. So Bitcoin is going to trend far more in a bull market, and then obviously in the midst of a bear market, no one really cares about Bitcoin. It's dead, you know, and that suggests a more fearful market, whereas when it's up in these higher ranges, it suggests a more greedy market. Okay, so that's all well and good. We know how these numbers roughly get into the fear and greed index, and now how they spit out a number. So here's the chart that you can see. So they give us a chart, and they also give us like a, what would you call this? Can't think of the word. Like an odometer. It's not an odometer. What is it called? Look, an odometer is the thing for a car, but we're just going to call it the odometer of fear and greed, because I can't think of the word for it right now. But basically, they give us a nice little pretty graph and stuff. But what we really want to focus on here is the fear and greed over time. So you can see that we have spikes, you know, up into the different various ranges, obviously 100 being the top, 0 being the bottom, and then the date charted along the bottom. And you can see how there's fearful times in the market, greedy times in the market. There's a whole bunch of different sentiments going on. This is obviously the maximum I'm on right now. So you got like the 1 year, 3 months, 7 day. You can, you know, really break it down, but we're just on the maximum right now. Now what I've done is I've gone and I've plotted these points on a chart so we can better visualize this. So let's take a look at that. So there's a lot going on in this chart, admittedly, but what we're looking at here is that the orange lines indicate when the fear has dropped below 20. So, and the thick orange lines, I'm not sure how well, hopefully you can see those very well, but the thick lines, there's one here, one here, one here, and one here. They indicate when the fear and greed goes below 10, and then vice versa. So the pink lines indicate when the fear and greed has gone above 80, and then the thick pink lines indicate when it's gone above 90. So you can see there's a strew here, one over here, and then we got this one blue line where the fear and greed, now this is obviously on a monthly chart, so we're talking about quite a large time frame. Now this one blue line, the fear and greed actually went above 80 and below 20 in the same month. So I just decided just to put it a different color. I don't think that's happened anywhere else, but you can kind of see the general trend, right? So the fear and greed index, does it perfectly call the bottom? Well, you can see that after 2017, after the big bull market that ran into 2018, the fear and greed index was, well, pretty useless. I mean, it called the bottom, yes, it did become fearful at the bottom, but it was also fearful well above the highs. So you can see if we just measure this out, if I can find the right tool, where am I going? We have a look at a price range for this. I mean, it was, hang on, the price from the bottom to the top. So when it first initially flicked fearful, we were still 70% from the bottom. Hopefully you guys can read that. So on the first fearful bar, you know, that being a reading below 20, it still dropped another 70%, and you can kind of see that over in 2020, sorry. So on the first greedy bar over in August of 2020, so this was, you know, the greed went above 80, you can see that we still rose another 500%. So basically, so the fear and greed index, okay, it has called the exact top at times, absolutely. You know, if you have a look at 2019, it pretty well called the exact top. I mean, the June bar was the highest, and it went, so if you'd have sold during that time, you would have been probably hailed a hero. And it did also call the top in October and November of 2021, where the market reached new all-time highs again. So it absolutely does have some merit in calling the tops and bottoms, but it's one of those things where it's going to call, you know, 7 out of the last 3 bottoms and 7 out of the last 3 tops, meaning, it's over predicting. Often it calls the top way too early, sometimes not even the top, and it calls the bottom way too early, sometimes not even the bottom. But you can see it does have some merit, definitely. Obviously, March, another great buying opportunity when the fear and greed index flicked into the fearful stage. So if you'd have bought then because of the fear and greed index, that's great. But of course, it's not 100% accurate. So the fear and greed index is an excellent tool, but it definitely shouldn't 100% dictate our trading plan. It's not the holy grail of Bitcoin trading. Obviously, it's not 100% accurate like any indicator, but there are some other pretty cool ways we can use it. So another way I like to use the Bitcoin Fear and Greed Index is as a bit of a divergence, similar to something like the RSI divergence that you get. You can kind of see, so if we go back and have a look at March 2019, March, December. So if we have a look at this on the Fear and Greed Index, so where are we going through? December 2018. You can kind of see down here, where are we? December 2018. You can kind of see down here how sentiment is rising. So from December, it's hard to look at without, because the thing pops up. But December, we got some nice lows. And then come November, January, February, we started to see higher lows on the sentiment. You can see the sentiment increasing here, despite, price basically being stagnant during, November, December, January, February. But what that indicated was market sentiment was improving, so price would likely increase. Now, if we have a look here at March 2021, April 2021, and then to October and November of 2021, we have a look at this. So we've got November, December, January, February of 2021, and then obviously we drop into April 2021, and then we come across to September, November, October, all those different months. So what we're seeing here is that, December of 2020, if we have a look, December of 2020 and, January, December, February, all those months were the most greedy. This is where the market was at its most greedy here. And then sentiment started to fall off over the coming months. And in fact, we even got, April being far, far lower, despite April being the all-time high month. So you could see sentiment had fallen off, which suggested, as we were saying, divergence. So price is rising, but market sentiment is decreasing, which suggests a top. And we do see it again in October, November, where basically, okay, fear and greed's high, but compared to the previous highs, compared to 2020, it was nowhere near. As you can see, yet again, what we're talking about, a divergence here, where January is obviously far higher in sentiment. So as we're saying, divergence. So price rising, sentiment falling. It suggests a reversal in price. If we have another look here, we've got June 2022 and we've got November 2022. So June 2022, where is it? January, June. So June 2022, we hit a fear and greed of 9. Or actually, I think it's a bit low. I think it dropped 7. If we can get it, I think it dropped to 6. So there it is. Fear and greed, absolutely shocking. 6 in June, and then come November, September, October, November, price had gone lower. So in June, fear and greed was at 6 here in June. Oh, I'm still on pen. So fear and greed in June was at 6, and despite price falling even further, going into new cycle lows in November, the sentiment had actually somehow improved. And what did that suggest? So we're talking about divergence yet again from there. So sentiment had improved, price shoots up from there. And then there's heaps of smaller time frame ones that we can look at. April to July, right? April to July. Where are we going? April to July. So we're looking at these two tops here. So we see a fall in sentiment, just a small decrease. I wonder, we could probably get this on the yearly chart. April to July. So you can see how there's a decrease in sentiment despite price actually increasing, which is indicated by that yellow line there. So that suggests that, sentiment is decreasing. There's likely going to be a pullback. Now, obviously, this is quite a small time frame we're looking at, just a couple of months. So the pullback isn't nearly as severe, We do kind of get it here again as well, between August and September. Where are we looking? So August, obviously, August to September, we see the fear and greed increasing despite this one wick. And there's a couple of wicks basically either side where the market swings a little bit, but pretty well, generally speaking, you can see that sentiment is increasing throughout August and September, and price is, August, September, slightly decreasing on the lows. So that suggests that going into October, we're going to get a green month, which we absolutely did. And then, we can just look at it recently, right? So, this is a bit of a prediction now, but sentiment has basically flatlined. Price has continued to increase quite rapidly. So that would suggest, despite the price going up very high, sentiment isn't following suit. So we would expect a pullback soon, which looks like we've started to see the beginning of. So we can see that there's various different ways we can use sentiment, hopefully, or the fear and greed index for the sentiment. Hopefully that made sense for the most part. Hopefully you guys can decipher this absolute monstrosity of a chart. There's a lot of lines on it, but hopefully the divergence made sense. Hopefully you guys understand that this is not a perfect indicator, but obviously it is a fantastic tool for tracking sentiment, because sentiment is so important in the markets. It's how people get fooled, basically. They get overly bullish at the tops, as they said. Overly bullish at the tops, which means the market's due for a correction, and overly fearful at the bottoms and miss buying opportunities. So don't let the emotions get the better of you. Follow a plan, follow something like the fear and greed index. Hopefully this video has helped you understand it just that little bit more. And of course, if you did enjoy, remember to hit that subscribe button. We are pushing for 400 subscribers, which is awesome. I want to thank everyone that's joined. Thank everyone for returning. And if you're new, thank you for watching this video this far through. Remember to hit that like button. Comment anything down below. We've got referral codes, all the whole shebang down in the description below. I'll see you guys in the next one.